Daniel, in general, it seems that Carl's sentiment is any business that Apple decides to get into, they dominate. That Apple ecosystem, as soon, whatever it touches, it somehow seems to win. That's not the case here?
Oh, yeah, I agree. I mean, if Apple put a logo on a yogurt, they'd end up
delicious.
Beating Pinkberry. I think that the key here is really about the next markets for Apple. I mean, we talk about Apple Watch and wearables, which we believe is really off to a strong start, especially on the supply chain once that gets fixed. When we look at Apple TV, I do believe that they did shut that down initially, but into 2016, I believe Apple will come out with an integrated TV. Part of it, they needed to get the streaming services, so I think it's a multi-step process. I do believe the Apple TV will be a...
So hang on a second. That's really interesting, and it suggests that what we read this morning or last night in the Wall Street Journal isn't entirely accurate.
No, I think it's true in terms that they did shut it down, the initial plans, but I think as we look out the next year, Apple TV will be a part of the product lineup for Apple.
When you say an integrated TV, you mean a television set?
I mean an actual television set, and I think this is something...
How could that be the case if, again, I don't want to cast aspersions on the reporting done by the Wall Street Journal. They do lots of great stuff. But it seemed to me, reading that story, that they had shut this baby down, that it's not... How could they bring out an integrated TV set next year if they aren't working on it right now?
Yeah, I think it's one of these where the jury's still out in terms of which direction Apple heads. And we talk about this initial Apple TV, which will be launched at the developer conference.
That's still the box.
Yeah, that's still the box.
Set-top box.
The streaming services. I think Apple is tiptoeing into the Apple TV. So I think it's one where temporarily they have shut it down. That's 100% accurate. But I think as we look forward, you cannot say they're not going to go into the TV market. When you look at the integrated, the IoT, Internet of Things, when you look at TV, automotive, and some of these other areas, given where Apple is, those are all potential total addressable markets that they are going to go after.
What do you think about this argument that Carl Icahn is making that Apple stock looks so cheap, even if they're up 50% on the year? When you look at the PE compared to the S&P, this thing's a steal.
It trades at 10 times X cash. And at the end of the day, even though the stock has had a huge run, when you think about their growth, I mean, next year, and I think this is where the street underestimates, you look at China. China, we believe, is a $150 billion market opportunity for Apple. Street's modeling in $70 billion. The growth for next year, Apple, 6-7%. There's a better chance of me playing in the NBA than Apple doing 6% growth.
I like that.
I see it more as, a 10 to 12%.
Hold on. What about market technicals here? We know how heavily weighted index funds are positioned in Apple. They have to be. But mutual funds seem underweighted just because they don't want to have that much presence in a single name. Are they going to wake up one of these days listening to you saying, wait a minute, you in the NBA versus Apple, and are suddenly they're going to say, wait a minute, I got to get in this game. And if they do, given how big mutual funds are, I mean, we're just going to see this thing on a tear.
And even though I do have a decent jump shot, I think the key thing right here is about them actually getting into wearables. We think about the watch. We look at China. I think the street is really underestimating some of the fuel in the tank.
But we have to balance the two factors in the equation, right? On the one hand, there's how much money you think Apple can make, and then on the other hand, there's the valuation. Carl Icahn actually is conservative, I'll call it, on the valuation. He thinks Apple should trade at 18 times what he expects earnings to be, and that's where you and Carl differ. I mean, you're about in the same camp that he is, right? At 19 times, you just think that next year Apple's going to generate $9.50 of earnings a share, whereas Carl's out at 12.
Well, I think 9.5 is where the street is, but I think a number could be close to $11, given we talk about China. When you look at the next year...
Hang on a second. Your report says $9.58.
Yeah, so when you look at the $9.58, when you look at what the upside potential here is, so what's the juice for Apple, right? The street wants what could be that upside? It's China, it's wearables. That's where you could get that extra leverage at the bottom.
The Apple ecosystem, once people are in it, they never want to come out. Just yesterday, Eric, you were guffawing at the multiple in which Yelp trades. Think about the value proposition of Apple versus so many of these tech companies out there that are doing what, for whom, and providing value.
Yeah, but
where?
that doesn't necessarily justify a higher valuation for Apple. All it says is that, like, the Yelp valuation is out of control.
Yes, but all of those valuations that are out of control, do we really see them normalizing? Or is there a higher probability that Apple, which actually provides extraordinary value and makes a ton of dough, is going to move into their direction?
And Apple's the gold standard. And I think the next step is really the developer conference in a few weeks. We believe, larger iPad. They'll give some breadcrumbs on a potential Apple TV. We look at the watch in terms of unit growth and when are we going to see that in retail stores. These are all key ingredients in that recipe for success. And it's really right now about, can Apple continue to show upside numbers? Look what happened.
You believe it can because of China.
China is front and center. China is the fuel in the tank for Apple. It comes down to it's a $150 billion market opportunity. Next 3 years, Street's modeling $70 billion. That's the upside right there in terms of China. And we believe China's going to be the #1 market for Apple.
Think of this Apple Watch alone. How many people you know, and they're so hard to find, are wearing them, and you're saying, do you love it? And they're like, I don't know if I love it, but I obviously got one. People want to touch whatever Apple makes. And if you think it's a little bit here, in China, it's extraordinary.
But this has always been the case, right? Even when Apple was trading at $400 a share pre-split, people loved Apple as much as they love today.
I think what Carl is saying, let's realize it. Let's take a closer look and look at how this company is performing, look at their PE, and realize the value. Realize how much we love it.
Carl is just pounding the table for a bigger stock buyback. That's all he's doing. Everything else is noise.
And in terms of the buyback, I mean, the $200 billion capital allocation that they announced, that really was suffice for the street. Now it really comes down to, just like you said, is it too loved? How do you see the multiple in the stock go higher? It comes down to them just continuing to deliver and, Cook continuing to really
One could make the argument it's too loved if they didn't make great products, which they do.
That's why, look, Apple has set a standard that every other tech company just sits there on their whiteboard and marvels at and wonders how they could. Look at China. You look at Google, you look at Microsoft, a lot of other tech companies. Apple has taken China from 14% of revenue, ultimately we believe 40% in the next 2 years. I think Tim Cook's going to be speaking Mandarin in the next 2 years.
Eric, I don't care how much Siri hates me, how much my spell check keeps me down. It's hard not to like an Apple phone.
I'm not talking about the phone. I'm talking about the stock.
Looks like a showroom.
Dan.
Yeah, great to be here.
Great to have you here. Thank you very much. Dan Ives of FBR Capital Markets.